Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management e-News. Thanks for joining us. So we have yet another very good example of why you cannot time markets. We have a bunch in the last few years, but we have yet another one. So if you go back to the so-called Liberation Day on April 8th, we know the market sold off sharp after Trump announced those original tariffs in the beginning of April. The markets hit a low on April 8th. But the S&P 500 is up 23% since then at a new all-time high. So this correction and market rebound was very much like the COVID one, and it was very dramatic and violent, but market came back quite swiftly. So it's another example why time in the market rather than timing the market is so important. We got a lot of calls from clients, the usual suspects, when we get market sell-offs, why this time it's different. And those are the most expensive words in the investment business, are this time it's different. So we don't like it any more than you do, the volatility. We use it as an opportunity to put cash to work in our own personal situation. Some of you did as well. Just remember, we're gonna have lots of volatility in your investment lifetime. Every one will seem like that one's different and that's the one that's gonna be the last one. But we know that at the end of the day, earnings drive stock prices, and earnings are still up 10% year over year. So earnings are continuing to grow. The second half of 2025 will probably prove to be more difficult as tariffs do take effect, and either companies are going to pay them or individuals. It's going to be either inflationary or margins are going to decrease for companies. There's no other way around that. So we shall see how that plays out. The other thing that's happening is we have a very weak dollar. The dollar had the weakest start to the years in 40 plus years, and that means international stocks are outperforming quite dramatically. So there is a part of your portfolio that has really underperformed for the last decade and a half that is now dramatically outperforming, and that is your developed international stocks. So that's why we asset allocate globally. So the big next, Josh can talk about, July 9th is out there on the horizon, and then this big, beautiful bill. So there's plenty of reasons to be worried about volatility, but remember that period we just went through is more proof you cannot time markets.
We talked about this on the radio a lot this weekend, but one of the big factors of why earnings growth is so powerful and why United States economic growth seems to just be this absolutely unstoppable juggernaut. Of course, we've got the Mag 7 technology companies, but we have this massive secular tailwind in the form of the baby boomer generation. There's roughly 80 million of you out there. Most of you, your lived experience was shaped by your parents who went through the Great Depression, and almost all of you now have virtually no debt, large amounts of accumulated savings. Household net worth now is roughly 50% accumulated in U.S. stocks, and those tailwinds, for all the you see these alarmist headlines about rising levels of debt, etc. What COVID did was functionally shift debt from household balance sheets to the government balance sheet. So, of course, now we have to deal with mounting U.S. government deficits, but at least on the consumer level, consumer interest payments have never been as low as a percentage of their total household net worth. Baby boomers, of course, own their homes. That's why they don't sell stocks during sell-offs. And they really actually, from the experience that we have running this business, don't tend to spend a lot of their accumulated savings. And that was, shaped by their experience in the great financial crisis, etc. But that is the secular tailwind driving markets. That's the secular tailwind that drives consumer spending. Remember, consumer spending is roughly 3/4 of US GDP. We are a services economy. All of the people that matter, the mass affluent boomers out there, are spending some money, but not a lot, and they're definitely not really selling stocks via any sell-off. So that's what's driving earnings growth, and it's a secular tailwind that has a decade plus and legs to it.
So as a millennial and a Gen Xer, we sit here and we thank you, baby boomers, for having done the right thing financially all those years. You are the richest generation ever by a long shot, and you are what is keeping this economy afloat. So we really appreciate it, and the rest of the country should as well. As always, if you have questions about your account or your situation, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks, and everybody have a great 4th of July. Back here